Guys, welcome back to another episode. So this episode I'm going to teach you guys a very important price action topic called a continuation trade. Now before you take a continuation trade, first of all you must establish your directional bias, either bullish or bearish. So what we can see is that the market came to this resistance level. This resistance level is actually a daily resistance level, weekly resistance level. So you can see the blue zone over here is actually a weekly zone. So tap, and then the market came here, it rejected with a long wick candle. Now let's move to the daily time frame. So the market rejected from this level, and then it was making lower lows and lower highs. So we started the trend like this: lower lows and lower high, and boom, the market failed to make a lower low, and then it made a higher low, which shows momentum loss. And then the market started a new bullish directional bias: higher high, higher low, higher high, higher low, and then boom, the market just took off. So when the market started a bullish trend over here, it broke this daily resistance. It also broke this daily resistance, and mind you, this resistance level is also lines up with the weekly resistance level. So it broke this level, it broke this level, and then it broke this level too. So this level also is a weekly resistance. So this one, have you seen this level, is a weekly resistance. So the market started a trend over here, it broke this level, it broke this level, and then it broke another level. So now the market actually took off three strong resistance levels, showing us that the bullish bias is very strong. So in the daily time frame, when the market closed above this resistance level with a bullish engulfing candle, that actually finalized everything, that look, the market want to come and tap this level. And when you check your left side, there is no major resistance level that can cause this market to reverse. The next resistance level is this level. So now, since our bullish bias has been established, that we have a free way from this level to this level, we are going to look inside this entire leg, this new trend that started over here. We are going to look inside this leg in the lower time frame for a continuation trade. I'm actually talking about this leg, this entire leg. We are going to look inside this entire leg for a continuation trade. So now I'm going to move to 1 hour time frame. And then 1 hour time frame, what do we see? So we are still within the leg. Let me delete this thing. We are still within the leg because our directional bias has been established. So now in the 1 hour time frame, all that we are going to look for is, we are not going to look for any sell, because based on our weekly and then a daily time frame, price is very bullish, and then we are looking for only buys, there's no sell. So that's what we are going to look for. We are going to look for either a pattern break that is showing a bullish trend, or we are going to look for a bullish trade setup. So in the 1 hour time frame, this is what we see. I can see descending triangle, and then the market broke the pattern. We took our entry here, and then we targets 1 to 2. Boom, we smashed TP. So this is actually a trade that we took. and now we are looking for another buying opportunity. So this is actually the major one, and we bank a lot of money on this trade. So now the markets pull back to this support level over here. um, so the market pull back to this support level, and also it pull back to 50 percent of Fibonacci retracement, and we had multiple rejection showing that price is unable to break below this zone. So that actually gave us a bullish bias unconfirmed, and when it bounced with this bullish engulfing candle, that is where we took our entry, and then we put our stop loss below the wicks, and then we targeted another 1 to 2. Boom. But we actually took some profit, and then we managed this trade. So the remaining trades we actually took 1 to 3. Yes. So guys, now you see how we analyze markets. If you want to take continuation trade, first establish your directional bias. Once your directional bias has been established, move into the lower time frame for a continuation trade. So assuming your directional bias was established in the weekly time frame, you move to the 4-hour time frame for a continuation trade. So if your directional bias were established in the, let's say, weekly time frame as a bearish bias, you move to the 4-hour time frame and you look for a bearish setup to trade with the overall higher time frame bias. And also, if you find your directional bias, or you establish your directional bias in the daily time frame, you move you move to either 2 hours or maybe 1 hour time frame for a continuation trade based on that bias that you have established in the daily time frame, either bullish or bearish. Yeah, so this is actually another price action technique in the nutshell. Thank you so much, and then I'll see you in the next video.